Hey traders, welcome to Charts and Coffee. Hope everyone's having a good morning. Happy FOMC Wednesday. We have the FOMC coming up in just 5 hours. So what can you expect? So first of all, if you haven't yet checked out what we're doing in the Sector Secrets Mastery, let me give you a little glimpse of what we're going to do. Today is a catalyst for swing trades, meaning, and I'm going to point out a couple things. Number one, if you haven't already, before 2 o'clock, check out over at the Simpler Trading YouTube channel. Check out the video that I cut on the Powell pullback idea. It's not enough to say we could pull back. We need to know in some way what the catalyst for that could be. And the catalyst for that could be really simple. And everything has to be measurable, gang. If you can't measure something, there's no way there's a repeating type result, repeating process that you can, I'll tell you a story. My mom is a fantastic cook. I mean, amazing. She can cook anything. It doesn't matter. And she never uses a recipe. So the running joke in my house is whatever you're going to eat that my mom cooks is going to be beautiful, but enjoy it because it's never going to be that way again. And so our trading cannot be like my mom's cooking. Now, some traders can be intuitive traders, and while there won't be a repeating process, usually they'll end up with a good result. I'll tell you this right now, gang, after 30 years, that is not the case with most traders. Us mortals need a repeating type process so we can manage risk first and foremost and train our eyes to find the opportunities. Well, part of training the eyes is recognizing trends. One of the trends that we've seen is that the FOMC expectations are, because the Fed fund futures are moving towards maybe a March rate cut, Powell might look at that this morning and choose violence. He might look at that this morning and say, no, the market, meaning us, we've got it all wrong. We're way too dovish, too early, right? They're going to cut. That's going to happen. But when is the cut going to happen? Does he need to move our expectations out to May? He may not, right? He may not. Interestingly enough, bond yields are lower as the ZB is higher today, right? You take a look at the euro, which is the best way to look at the dollar. It's higher, which means the dollar's lower today. So when we start looking at where equities, treasuries, and currencies could go, they're in alignment with coming rate cuts. If Powell wants to undo the early expectation and make it so it's more aligned with May, we could see a pullback. We want to buy into it, because just because he's not going to maybe cut with the FOMC chuckleheads in March of next year doesn't mean that they're not going to cut in May, possibly in June, probably in July, onward and onward, right? So that's where we are, and that's where the opportunity is, but it's not widespread, because while all this chaos is going on, we've got window dressing, and window dressing is that portfolio. Think about what window dressing is. Put all the best stuff in that showroom window. And what's the best stuff? The stuff that's up on the year, that stuff that's up above its 200, the stuff that's in an uptrends. It lands us in 4 places, and all roads lead to the NASDAQ. Semis, tech, communications, consumer discretionary. Even consumer discretionary has caught on, but not in the way that we would think. It's Home Depot, it's Nike, it's McDonald's, it's lumber, it's burgers, and it's sneakers, right? It's not necessarily a lot of clarity from Amazon, although I sure as heck would not short Amazon. Amazon's just been really erratic. So if you're interested in the trend in Amazon, take a look at the 1 hour time frame. That's something we do in the mastery, by the way. We ask ourselves, do I want to be in an overnight position with longer term time horizon expectations, or do I want to be in a shorter term one? And part of that is, yes, overnight exposure. Yes, further dated out options. But the other part of that is, do we or do we not have the ability to expect the trend to continue, because we get paid on follow through, right? We get paid on follow through. And that's where we have to remember, it's not enough to get a fill. You've got to get the follow through. That's where we get to ring the cash register. Amazon, not terrible, maybe short in the time frame, but Home Depot, McDonald's, Nike, amazing. Steer clear of Tesla, gang. I get a lot of questions about Tesla here in the show every morning. Why would I want to focus on something in a sea of uptrends? Why would I want to focus on something in chop, right? Apple uptrend, Microsoft uptrend. What's not in an uptrend? Meta. What's not in an uptrend? Google. So there are things that aren't as good. Trade this, not that, right? Let's keep that in mind. I know that's not something that a lot of people might remember. Those, I think it was a diet book. It was a little picture book. And on one side, they would have fried Cheetos, and the other side, they would have baked Cheetos. And eat this, not that. Y'all remember that? We need to think about trade this, not that. We need to think about, yeah, I really like Google, but what is it that I'm really trying to do aside from we want to make money? What do I want to do? I want to take advantage of a symbol that has the ability to continue. That's going to be Apple, gang. That's likely going to be Microsoft. Another one I get a lot of is NVIDIA. Do I like NVIDIA? Trade, and I think a lot of times people take it personal. Why can't you like NVIDIA? It's done. No, it's not about what it's making, what it's done. It's what is it doing now? AMD looks better, right? In terms of the context of the trend and therefore follow through, AMD, Intel look better than NVIDIA. They're all in the same group. So this is what relative performance looks like. A lot of folks say this multisyllabic thing, but relative to what? Relative to the group of stocks that it's trading with because of these groups of sectors that are popular ETFs. And that's really what we're dealing with, gang. That's a synopsis of what we're going to continue to do this month and what we are focused on in the mastery. All right. With all that being said, let's see. Does the cat have everyone's tongue or fingers this morning? What kind of questions do we have? Now that I've kind of laid out here a little 8-minute game plan for today. And again, gang, buy the dip works. It does. It gets everyone memes and makes fun of buy the dip until trends happen and then everyone's a dip buyer. But what does it mean to buy the dip? It means to recognize a trend and wait for the pullback, right? That's the key. That's the key. And you can see a lot of what I'm looking at here. All right. You can see a lot of what I'm looking at there. Okay. So, and by the way, for those of you wondering, I got a few emails after yesterday's video, which again is over at the Simpler Trading YouTube channel, the Powell pullback one. People said, Rog, what is this? This is called workflowy. I love this. It's a separate like Evernote or Microsoft OneNote. This is something that we keep for the members in the mastery, where when we have trade ideas, we're planning a day, when we're having a discussion about all the things we're going to have to deal with, having notes, having something to refer back to after the session, before the session, really, really helps. All of us know you want to learn something, listen to it, do it, write it down, right? And that's all going to help with, remembering why you're doing what you're doing, sticking with the process and not freestyling it, right? Not getting caught up in freestyling it. All right. First question. Thank you, SJ. Thank you so much for insight in last night's video. My pleasure and my job. I'm curious as to why I chose December 29 or Jan 12 expiration and not monthly expiration or further. So SJ, we have a concept that we embrace in the Sector Secrets Mastery, and that is this: do not pay for more time than you need. So if there's a particular catalyst, some of you might know that the blog that I keep here, a lot of us, a handful of us here at Simpler, have our own blogs, right? And mine's called Countdown Trader. I said, what the heck does that mean, Rod? Countdown Trader. It's the fourth factor of trading, right? It's the fourth factor, time. And if you've never been to countdowntrader.com, the Trish boss keeps this up with pertinent, relevant. We get into recaps, all that stuff. So if you don't check this out in the regular, you're really missing out. Check out what we've got there and you'll see a lot of what this countdown psychology is. So SJ, how does that apply to your question? Countdown means, for me, what is the event that I'm anticipating is going to be the reason that XYZ stock is going to go up or down, preferably up. I like to be a bull. If I'm looking for January 29, I'm really taking advantage of window dressing, Santa rally. Think about what's going to happen by the time we get to December 29. Do I need to pay for more time than that on a 1 hour time frame trend? Probably not, right? Now, Jan 12, as I explained in the video, will take us through that little bit of retail trading follow through. If we get a strong end of the year, we'll see the very beginning of the year. Oftentimes, the first handful of days, sort of this will have a little bit of the after effect of the Santa rally. I don't consider that Santa anymore, right? Once we get to 2024, Santa's back at the North Pole, people, right? His elves are back. They're back working on, making iPhones or whatever they do. So when I go to the new year, I know a little bit of that retail trading trickle will happen, and that's where Jan 12 will help. Now, the other catalyst that I mentioned at the very end of that video, and this is something that we're doing in the Masteries, we're preparing for earnings season. Now, earnings season is a different countdown. When are the releases, right? So a lot of what it is that I want to take advantage of is predicated on the time, the date specifically. And that's why, depending on what it is you want to take advantage of, you can toggle between three choices, the end of the 29th, 12th, or even something further out. But remember, do not pay for more time than you need. Know your catalyst, right? And you'll say, okay, I don't need, because time is expensive, gang. It's part of the expense of the premium that we buy. And if I'm buying time that I don't need, what's the point, right? It's like buying features on a car you're never going to use. All right. So DAL, of all the things that right now are moving, I'm not sure Jets is one of the more established trends, Munir, but to your point, Jets has most recently started to trend higher. All right. So when I have the broader group moving higher, and by the way, you might say, Rog, what is Jets going to be more related to? It's going to be more related to IYT, which is moving higher. Jets, all of that's going to be more related to the Dow, which is also in an uptrend. So now the question is, and I'm doing this on another screen. I'm going to open up. Sorry, y'all can't see this at the moment, but I'm going to open up, Munir, the JETS. Now I sound like a football fan. I'm going to open up the Jets ETF, and this is UAL, AAL, Dow, Love, Allegiance in there, SkyWest is in there. Anyways, all those airlines, right? I'm going to ask myself which ones of those are in uptrends. Southwest is in an uptrend. DAL is in an uptrend. Last time I checked, AAL and Jets itself. So this is that relative performance. Relative to what? So yes, buying the dip in this environment would likely be fine. Just double check, because I have not, Munir, been looking at airlines. So this is what I need to do. All right. Oh, okay. It is up on the year. It is above the 200. It's above the anchored VWAP. So Jets is looking better. Now, Jets and Dow are doing the same. Yeah, Dow would be a great choice. And do you see the process, gang? Like, wait a minute, Rog, I've never built a watch list like that. I'm looking for whether or not some secret squiggle's doing this relative to another thing. Look at relative performance. That's how we do it. So if you think, wait a minute, I need a little bit more of that in my life, come check out what we're doing, because it's a very simple process. And if you think about it, psychologically, it's very sound, because why would someone buy something at the end of the year to window dress that what isn't something grabbing attention? Think about being a money manager. Think about, put yourself in their shoes for a minute. They're moving size around. We're all, obsessed about flow and size and big money, right? Think about what they're doing. They've got to present, right? They've got to present to their clients, this is what you have as 2023 rolls to an end. Do you think they want to show them, hey, I got you an XLE? And that client's going to say, XLE? Are you kidding me? I've been watching television. That thing's heading lower. I've got you in crude oil. You say, crude oil? Are you kidding me? That's moving lower. What do most clients want to hear? I've got you in Apple. I've got you in AMD. I've got you in all those things that are moving higher. I know. It doesn't make sense. It doesn't, because cost basis is all that matters. However, come next year, that's where some of these trends that are just starting to come on, our watch list is going to shift. So the things we're talking about right now in the mastery, the things that I'm talking about right now with you all, come next year, everything's going to do a 180. And that's really where it gets pretty exciting, because now we're going to start to bottom pick. Dow would be valid for that series of questions that were answered. Dow, transports, jets, the stock, right? Index sector stock. All right. Hey there, Brandon. Good morning. On big economic weeks like this, yes, it sure is. Do I prefer to enter swings later in the week, or just day trade until all the news has come out? So yes, on the day trading, Brandon, although I will tell you, the last 2 months of day trading have been tricky. Volatility has been, well, volatile. We've had a lot of moves that have been sudden, not necessarily in line with a trend. It's been challenging. We've had environments where index sector stock, Monday's session was probably one of the most crazy. I mean, I heard Ozzy Osbourne yelling all aboard on Monday. Why? Because the Magnificent Seven, had nothing to do with what was happening in the NASDAQ. It was absolutely disconnected in terms of the high concentration weighted stocks that move an index. Very odd. Does that happen often? No, but that's a warning that something's just not right. And follow through can be tricky. But follow through is still bullish, gang. Please, please, please don't think this is the month to try to pick a top. January, different. I'd rather go bargain hunting in January, but this is not the month to go step out in front of the movement higher. And let's not bet on Powell, doing Lucy and Charlie Brown with the football to the market today. Although if it happens, we definitely want to buy into it. Day trade, after Powell creates the chaos, which he may or may not, today after 2:30, maybe into tomorrow, it's going to be the window for this particular catalyst. So day trade, yes. After Powell, we don't want to pre-position in front of Powell. That's a big bet. And I don't hate my money. All right, next up, related to SJ's question, say the open interest is not enough. What do I do? Walter, if I am looking at a December 29 expiration and the OI is not sufficient, and you're going to see it in the spread, you're going to see it in the open interest itself, go a little further in the money if at all possible, or you might have to go to a different expiration. So when we're in the mastery and we're setting up a trade, we love the chart, we head on over to the options chain and we see that the strike that we want for the expiration that we would like has, say, sub 500 or sub 1,000 open interest. No good. Widespread. No good. So we might go a little further in the money, or we might go to another expiration. So we just have to adjust, right? We have the one that we would like, but then we have where the liquidity may be, and we've got to go with the liquidity. But I'll first try to stick with the expiration that I'd like, and I'll go a little bit in the money. If that doesn't work, I'll have to go out to a different expiration and then try that process all over again. All right, gang. As always, thank you so much for being here for charts. And, well, actually today's an espresso, but it's coffee. I'll see you tomorrow, same time, same station. Heads up, Powell at 2, presser at, well, I should say FOMC monetary policy statement at 2, Powell at 2:30. Powell, let's see what he does. Be good to each other, gang. Talk with you tomorrow.